Welcome to another amazing video. And today we're going to be breaking down objective thinking versus discretion. Now, you might be thinking this is not going to be very important, but I implore you to really watch this video through and through. It's not going to be a very long video, but it is going to break down an important concept. And this is going to go in my playlist of edge building videos where we really want to break down in-depth principle that should help you design and build your model the same way I have built my model. Because all I'm doing with this series is that I'm reverse engineering what I was doing, what sort of step that I took to essentially design the edge that I currently have. And just FYI, I was able to finally, just in the past few days, our team finally finish building our indicator, our very first indicator. So I'm going to show you shortly, maybe in some of the upcoming videos, I'm going to be having a breakdown and showing you the exact features of that. How is it performing in the live market? It is matching my execution in the live market. I would say close to 95 to 98% of the time, it is exactly what I would do in terms of the trade and execution. It's probably about a 1%, 2% here and there. I would say probably like 6%, 7% of entry that where I would, let's just say if I'm using discretion, if I'm using my own, let's say, understanding of what's happening, I would re-enter. But, as far as for the indicator, I mean, it's amazingly working. Now, not to drift too far away from today's topics, I'm going to talk about objective thinking versus subjective thinking, or discretion, I should say more precisely. When building a system, right, you need to understand that if you have a strategy which utilizes a lot of discretion, a lot of subjective way of thinking, it is going to be extremely tough for you to be actually building a strong edge. Most day trader, when they come into the market, don't actually have an objective strategy, or they don't have an objective steps. Now, what do I mean by objective? It is very simple. You can look up a definition in terms of like what objective mean, but for me, it is extremely simple. If you have a strategy that, let's say, if you explain to someone the actual steps, right, and then they understood every single step, they take those exact steps and then go back and then they try to place an entry based on your step that you have described. You and that person will get 99% of the time the exact same entries. Now, if you have certain things that says you need to have volume to be high, or you need to have strong displacement for me to enter, or I need to have price reach a certain level, that indicate some subjective thing that in your mind it makes sense, but objectively nobody else understands. That's the part where discretion and subjectivity comes into place. That means that you have recognized a pattern that maybe makes sense to you, but you have not really spent the time to break down and reverse engineer what does this actually mean on the grand scale things outside of your mind. And this is a part of trading that you need to consistently work towards, right? Work to trying to break down what exactly does this mean? Like, okay, I'm going to go over the next tab and show you the next page, what are actually going to be some of the components of the edge that you need to make sure that you objectify. So for example, market structure. In my previous video, I have made videos about qualified swing high, qualified swing lows. I have also made some videos about trade target, like how do I identify my trade target? I made a video talking about standard deviation levels. If not, that video should be posted very soon. That will break down how do I select my target based on my specific entry type. High probability objective, those are going to be relying precisely on measure psychological level. Those are whole number that you see on the chart. Numbers that ends with 2 zeros or 3 zeros on the NQ chart or the ES on the or the 1M chart, right? Those are going to be your measure psychological level. So those levels are fixed, right? So meaning that if I tell you that I have a target, right? Meaning that I'm usually targeting a standard deviation 2.5 from the anchoring the low to the high of my PD area, or the low of the high of my order block, or the low of the high of the candle that has a fair value gap, or the low or the high of the confirmation line of my unicorn breaker if I'm trading the Arcane breaker. These are typically going to project my standard deviation, right? Negative standard deviation, and that will give me the level where I would essentially exit my trade. Those are my objective level for target. HPO, I have made a video on HPO, and if you want, I can reference, if you like me to do this, I can reference all those different video in the description in this video for each of those main component that I have made video on regards. Trade condition, right? An example of trade condition, some people like to use low resistance liquidity. A lot of people that trade ICT, for me, it is simply efficient liquidity run. I have made a video on that. If you want to learn more about that, definitely go out, look up in my library of content, efficient liquidity run. You guys will find out more information in regards to that. Trade management, right? How do you manage your trade? It is important to understand that the way that you manage your trade has to be based off data. A lot of people don't utilize data to be able to determine how they're supposed to manage their trade. So for example, for me, for my Arcane A plus model, if I'm trading an Arcane breaker, most of the time, standard deviation 1.5 or 1.2 will be like the target where I shoot for, or a very fixed RR of 1.5 typically will be a very safe level for me to target if I'm trading my Arcane A plus model. Another way I'm managing my trade is that, okay, if after 2 hours my trade has not really moved in between my entry, still right next to my entry. If I see a 15-minute candle rejection off of that, I typically will move my stop loss to break even and then let it rip, do whatever it needs to do, and sometimes close at 1-to-1 if it has been more than 2 hours. Another thing that I sometimes do for my BOB, my volume order block, reversal entry or reclaim order block, I will let that run for at least 3 to 4 hours if it does run. Look for something on the opposing PDA rate to get crossed. If we tag a major psychological level, I may potentially get out if it's already very close to my target. But those are some of the ways that, based on data and based on observing the trade that typically tend to reverse, that don't always go to full target immediately, I was able to develop a mechanics for trade management to exiting myself, taking myself out of the market when I can tell and I can observe that price is not going to move efficiently and very fast and directly to my target. That's trade management. How do you manage trade that are not going to move efficiently directly to your target? And you need to have those data to be able to determine that. And it has to be objective, meaning that you cannot just say, well, and I'm looking at price action. I feel like if the volume or the speed of the candle is kind of like low, it's not going to deliver. Okay, what does that mean objectively? Like if you were to give this role to someone else, if they're looking at the chart, when you say that the speed of the candle is low, can you use a different word to describe that where someone can understand that? What do you mean by the speed of the candle delivering? Right? Like, what does that mean? I have so many people that come sometimes to me and tell me all this weird description of what they're expecting for price to do for them to look for an entry. They're expecting for price to do to manage their trade or sometimes looking for confirmation. And I'm like, this is so subjective. This is discretionary and extremely subjective. That's fine. Discretion is important, right? When trading sometimes, especially if you're manually trading, but you need to have objective rules and objectify your way and approach, right? When you objectify it, other people can understand it. That just like I'm mentioning right now, if I have target, if I have spent more than X amount of time, I'll look to potentially get out if you're still around this level. See how I'm using terms that can be identified, meaning that if you see my chart, if you're looking at the chart right now, you see my entry, you see my take profit, you see my stop loss. And I'm telling you, if my trade is still around my entry and then it has been more than 2 hours or 1 hour and a half, I'm looking to potentially see a rejection on the 15-minute time frame. So I switch from the 1 minute, which is my entry time frame, to the 15-minute. If I see that and you reject off of that, I'm moving to break even. If you spend more than 3 hours, I close my trade. So those are some example of trade management in an objective fashion. Entry, objectify, has to be tied to the way that you define your swing highs and swing lows, especially if you're trading order blocks, especially if you're trading like breakers, for example. You need to objectively define that. That's what I marked qualified swing high and qualified swing low here in the first portion, which is like the foundation of most people's model. Now, do you need to have somewhat of a definition for swing highs and swing low? For some model, you don't really need it. For people that trade fair value gaps, but I truly believe anybody that trade in general need to have a base understanding of market structure and define their own market structure. They have to have the step towards that. Next up is going to be key level. Last but not least, key level. Areas of interest. See, if you are not careful, right? If you're not careful of making sure that you objectively define a few key level objectively, I said it objectively. So for example, my Arcane or A plus model, I have always, and then for the most part, have always utilized 15-minute fair value gap and then 1 hour fair value gap before I expanded to other models, which I trade now, the volume order block and then a bunch of other ones, which we'll talk in futures video. I was just using 15-minute fair value gap and 1 hour fair value gap. That's all I was utilizing because that was the most aligned time frame in my lower time frame entry. If you're trading on the 1 minute, usually the aligning time frame is going to be the 15-minute, and in some cases, it could be the 1 hour because the power of three or the way that a candle on the 15-minute time frame or the 1 hour print sometimes gets impacted by how a distribution and entry prints on the 1 minute. Those were the two time frames that I really needed to look for in terms of high identifying key levels where to trade off of. So those were like my area of interest on a higher time frame. And that's where I got my context, meaning that if I'm expecting continuation towards probability objective, HPO, as you see here, right? I'm looking for price to essentially set that probability objective, that target, right? And then I look for a key level to trade against back towards my high probability objective. That's all my strategy was. Not that complex, not that crazy. Extremely objective, right? I have defined everything in an objective way where once someone understand what is an HPA, once someone understand what are the key level that I utilize, they understand how I build my narrative, right? Which is simply designing, identifying those HPO, right? Or those target level, identifying your key zones, and essentially waiting for price to bounce off that and trade back to those targets if they are present for your session. That's it. Everything in between is just trade management and ensuring that you also have good trade condition. But sometimes people want to complicate trading, make it more complex than it is. Just have a foundation and build on top of that. Focus on one specific model, focus on one specific strategy, hone in on that, master it, gather data as to how to manage it. Because I'm gonna tell you something, your edge is really going to be built in trade management. It is going to be understanding when are you more likely to catch a loss and then identifying the condition to minimize the losing trade from happening. That is going to be the most important part. And this is why you need to have objective rules, objectifying your way of building an objective approach, right, to trading. Because without that, it is going to be extremely hard for you to have success in this industry. So this is the video for today. Like I said, I didn't want to make it too long, but I really wanted to break things down the way where you understand what are the edge components that you need to focus on making sure that they're not subjective, right? That you're going to always use discretion, right? But the discretion that you utilize, is it applying objective way of thinking or is it applying subjective, extremely subjective way of or approach? Because if it is subjective, only you can understand it. You cannot measure it and then you cannot grow it, right? Because you cannot grow what you cannot measure. One of the things that have helped me tremendously, right, coming from a technical background and IT background, is that I cannot wing certain things. I cannot, simply say, well, the process for this is this way, and it only works in my head. You have to live in reality. You have to operate in a way where it has to make sense to other people as well, or at least try to break things down in a way where it will make sense to other people. That's one of the ways that you vet and discern whether or not what you're building actually makes sense, right? Because if you try to have those steps in depth and broken down, where if you have a one-step one and you ask someone, do you understand this step if I break it down this way? And then they tell you, oh, I don't understand. And then I say, okay, what don't you understand from the step that I just explained? And then they will tell you, what do you mean by this? What do you mean by high volume? What do you mean by displacement? Or what do you mean by that? And then you make them ask you question, or you try to put yourself in a position where you question your own steps. And then what you can also do, you can utilize ChatGPT to essentially do that for you, where you have ChatGPT work on making sure your strategy is objectified. And then you can utilize as a consultant of some sort, where you give out your strategy and then you have it essentially consult you and say, hey, question me on every step and then try to let me know what is objective and what is subjective. And then trying to make me define things that are objective and then only let me pass the next stage of the next step until I have objectively define that. And then you'll be very shocked. You might spend a bunch of hours on that app, literally trying to objectify in every step. And then it may help you as well, having some AI tool, because that would be one way I would utilize an AI tool to improve my system, right? Obviously, this is something I was able to make better and then improve because of my background, but not everybody have that same level of understanding. So this would be one practical way I will leave you with at the end of this video to take and then apply, and that could be practical and help you actually build and strengthen your edge. With that said, that's all for today's video. I hope this was insightful. You gain a lot of valuable information as to how to take this and essentially go ahead and build your edge and then hopefully refine your process in identifying what is your edge as you are going through this journey as a trader. I know it's not an easy journey. I'm going to try to do my best to make it easy for you guys. And very soon I'm going to be making a video in regards to the Arcane indicator, that are the very first full automated indicator that's giving signal, is giving the entry, the contract, and everything else. However, we're not going to go public with that. I'm going to keep it to probably a few amount of people to have this, just to make sure that, whoever that we give access to this, we can help them to the best of their ability. If you're interested in that and want it on the wait list, reach out to me on Instagram. You're probably never going to see that being posted, a link about that. It's going to be mostly like people that reach out to me and people internally. So if you're interested in that and want to find out how to potentially get onto the list once it goes live, just reach out to me personally on Instagram, and I'll go ahead and give you the details on how to essentially get on the waiting list for that. So with that said, I will see you guys in the next video. Until next time, stay safe, stay in profit, most importantly. Peace.